is going on to the AMC stock family? In today's video, we must talk about how Citadel is trying to steal the AMC investors' share, and some may even say that they already did steal shares, upwards of maybe 1 million shares, just to avoid margin call. Now, what exactly do I mean, and is this even possible? Well, yes, it is, in my opinion, and not even in my opinion. This is what the AMC members are saying, and they are actually fearful because of this, because this is just simply not fair, AMC stock family. We have been in so many situations where everything has just been against us. And when everything is against us, we usually end up having the AMC share price fall. But I am so happy on a day like today, which we did talk about in a previous video, how the AMC stock price needs to go above $35 a share to start the reversal of the trend upward. Well, if we understand what the support level is, that'll be helpful first of all. And so this support level is going to be the $35 support level. So the reason for this is because AMC stock, this used to be a support level once. And so now we are understanding that this is actually going to be the resistance. And what price are we at right now? We are sitting around $38 a share. Very happy for all of us. But this is what Citadel tries to do. Because on the day that AMC is down, or the days that AMC is down, because we know for the AMC investors, we have been invested in this stock for more than a couple weeks. And so AMC stock was down consecutively for a while. And so with this consecutive downfall, what Citadel decides to do is to avoid their margin call because they are losing in their position. Now, no one knows exactly how much they are losing. However, they decide to reroute their shares to another exchange. And so what is this exchange? A lot of people believe that it is the dark pool. And so why do they have to reroute their shares to the dark pool? Because they don't want anyone to understand their position in the first place. We don't know how much they're losing. All we know is that Melvin Capital was losing money, and then they went to Citadel to have an emergency fund, right? Citadel acted as their emergency fund of $2.7 million, and so $2.7 million, that may not even be a lot for a hedge fund, but again, $2.7 million for the average retail investor, that is more than enough to cover any type of position. And so Melvin Capital, I believe they were underwater by 53%. In other words, that is synonymous to Melvin Capital lost 53% of their hedge fund. And so if we go to page 18 of this filing talks about how reconsidering the interdealer exemption from uncleared initial margin rules. And remember how I said that Citadel was to some extent stealing the AMC investors' share? That is because of the rerouting. Their margin calls, that is something that a lot of hedge funds are fearful of. For example, we have JP Morgan. They just announced new rules so that a lot of the investors that work for JP Morgan, they do not get margin calls, because margin calls are also synonymous to forced liquidity. They must sell some of their positions in order to stay at break even. And when you're at break even, you're not winning nor are you losing. You are more neutral. Charles Schwab did the same exact thing because they do not want investors working for them to lose money for their banks, for their institutions, or for their corporations. And what's even more unfair is how Citadel decides to completely hide these shares that they bought. And so I'm going to explain exactly that in just a few minutes. And yes, you heard that right, because one of the AMC investors, and actually not one, but two AMC members, decided to say that they noticed that Citadel was hiding the shares. And this parallels and correlates with how Citadel is basically stealing the shares of AMC investors. Because when the price of AMC is down, a lot of people start to panic. However, Citadel does not panic because that is when they buy shares. No one knows if they are trying to sell the shares, because remember, you can open a position by either buying the stock for the long term or by selling the stock, and that is called a short selling position. So there's a long-term position and there's also a short selling position. Now, based off what we know right now, usually Citadel decides to have more of a selling position. In other words, Citadel makes money when AMC stock decides to fall down. And I believe that at one point, Citadel decided to open a position of AMC stock, and that ended up equating to roughly 1 million shares. Near the end of the day, the shares that Citadel decided to buy, that as I said was worth roughly 1 million shares equated to, they ended up just disappearing from the market. And so when the stock was down or when the stock was up, because no one knows how they're making their money, no one knows how Citadel's losing their money, are they deciding to buy the stock and to hold it for the long term, or are they deciding to sell it and hold that selling position for the long term, right? Shorting versus longing. No one really knows what type of position Citadel has for AMC. However, how does the shares, the 1 million shares, just decide to disappear from the total volume near the end of the day? And so a lot of the AMC members, they're believing that Citadel is trying to avoid the margin rules. They are trying to reroute the margin rules itself, and they're trying to exempt themselves from margin so that they do not end up having margin calls. So real quick, we're going to be talking about the rules that Citadel is trying to sway away from, and we're also going to be talking about the AMC members and what they noticed with the insane 1 million volume of the shares just randomly disappearing. We're going to talk about the rules right now. While the CFTC and prudential regulators have applied initial margin requirements to interdealer uncleared OTC derivatives transactions, the Commission provided an exemption to this important segment of the security-based swaps market. This means that a dealer regulated by the Commission is not required to post or collect initial margin for uncleared security-based swaps entered into with another dealer. Exempting the interdealer position of the security-based swaps market from uncleared initial margin requirements undermines the regulatory objective of mitigating systemic risk and promoting central clearing. This is absolutely insane. And as I said before, Citadel is really trying to work the margin rules in their favor, and this goes in with the SEC because Citadel does not want these margin calls. And how are they even getting these margin calls in the first place? First of all, they don't want the AMC investors to know how many shares they have. That is a problem because no one knows what clear direction Citadel is trying to go to. So again, with the 1 million shares just disappearing, that is not okay. That's not fair. And in my opinion, it is a serious issue. But remember, I'm not a financial advisor. These are just my opinions and these are just my thoughts. So continuing on with this says that the CFTC and prudential regulators specifically concluded that in order to effectively mitigate systemic risk, it was necessary to apply initial margin requirements to uncleared interdealer transactions, and the Commission's final margin rules how it reached a different conclusion. In addition, data shows that voluntary clearing rates increased for interdealer transactions following the implementation of uncleared initial margin requirements by other regulators. In contrast, however, data also shows that bilateral trading is less costly than central clearing if there is an available exemption from uncleared initial margin requirements. As a result, the Commission's interdealer exemption can be expected to create a disincentive to centrally clear. In light of the above, we recommend that the Commission reconsider the exemption from initial margin requirements for uncleared interdealer security-based swaps transaction. This right here is the most important paragraph because I'm going to read it one more time just to reiterate what exactly Citadel is trying to do. And understand this, again, so in light of the above, Citadel is recommending that the Commission reconsider the exemption from initial margin requirements. We must highlight this just because of how absurd it is. Citadel is really trying to get the Commission to favor what Citadel believes, and so Citadel is trying to have their own implementation of rules, and by doing so, they are trying to get the Commission on their side so that Citadel ends up having the rules based in their favors. And this is not fair at all whatsoever to the AMC investors, but at this point, it seems like nothing is fair. And again, that's why I'm so happy that on a day like today, we are up. I'm glad that we have some sort of a reversal trend starting for AMC because the AMC investors have gone through so much. And just get this, guys, the AMC volume just a few days ago, we were close to 1 million shares in volume. And so a lot of people think that this was from Citadel. This was right before the after hours, right before the 4 o'clock Eastern Standard Time that the market decides to close. However, as soon as we get close to the end of after hours, which means the closing time of the after hours trading, that would be around 8 p.m. Eastern Standard Time, that is when AMC stock, the volume of that 1 million shares, right? So in after hours, 1 million shares seem to disappear from the end of day volume before reappearing in the end of day volume later before after hour close. I believe this is because Citadel got margin called at 11:27 today, and therefore those 1 million shares traded had to be rerouted or redone. I cannot be certain. I don't know if that's a thing or not. The concept makes a lot of sense. What do you guys think, AMC stock family? Do you guys think that Citadel decided to reroute these shares? Because what they were trying to do with the Commission so that they end up agreeing with Citadel with the margin requirements was this to protect themselves for a margin call. And so what are they trying to do exactly? Are they trying to make the AMC investors think that Citadel has everything under control? Because at the end of the day, Citadel, as we understand thus far, Citadel has a lot of selling position on AMC. And when AMC stock goes down, that is when Citadel makes money. And once Citadel decides to demonstrate some sort of disagreement within their own community, right, within their own hedge fund, and when they start to show signs of weakness, that is truly when the AMC stock family will start to rise up, and that is when they will create more volume, and that is when they will start buying even more shares. Because it is not just the AMC stock family, it is also the people that are invested in GameStop. You can never go against the retail traders because right when you think you're winning, the retail traders will buy a stock an insane amount of volume, and just like what happened in GameStop where some hedge funds actually ended up going bankrupt, the same may happen this time around as well. And so with that being said, AMC stock family, thanks again for watching. I'll see you guys next video.